aided by the $57.8 billion merger of HDFC Bank and HDFC, India Inc. reported its highest ever mergers and acquisitions in value terms in the calendar year 2022 at $171 billion. The year before, deals worth $145 billion were announced. Before 2021, the previous record was set in 2018 at $129 billion. Compared to 2018, the years 2019 and 2020 saw a fall in M&A deals in value terms. So, what changed in 2021 to arrest the M&A decline and break the 2018 record? According to professional services firm Dezan Shira and Associates, disruptions caused by the COVID-19 pandemic accelerated the acquisition trend in India. Companies took the acquisition route to pursue accelerated growth. Moreover, buoyant cash reserves, FDI inflows, and low interest rates allowed the corporate sector to realize a greater deal momentum. Consider the stellar rise in corporate earnings in FY21 and FY22. The combined net profit of India's listed companies jumped 63.5% year-on-year in FY22. The 955 non-financial companies in Business Standard's sample had reported a combined net profit of $86.7 billion in FY22, compared with $53 billion in FY21 and $31.3 billion in FY20. Overall, annual corporate earnings rose 66% from the pre-COVID level of $52.2 billion in FY19. This would have left companies with considerable firepower to deploy for mergers and acquisitions throughout 2021 and 2022. Many companies also instituted cost cuts to reduce overheads and increase efficiency in 2020. This led to a high availability of cash with these firms. Meanwhile, many companies which were unable to cope with the impact of COVID were either looking to get out or searching for an entity to take over their business. These factors have also encouraged the cash-rich among India Inc.'s companies to expand and eye inorganic growth. A report by consulting firm Bain & Co. said that the appetite of Indian companies for acquisitions had increased post-COVID. That was towards the end of 2021. The report cited business disruption triggered by COVID as the driver for Indian firms to transform their businesses through M&As and asset sales. This was evident by the M&A activity in India hitting the then all-time high in 2021. The report had said that the acquisition activity was expected to continue in 2022. The report also outlined major themes that were driving the acquisition activity. There was the democratization of M&As, with 2020 and 2021 seeing more first-time buyers than ever before. The other major theme was that more M&As were focused on transformation rather than scale. The report said that scope deals, which are acquisitions outside a company's core business, steadily grew their share in deal volume. In fact, in 2021, scope and capability deals accounted for 4 out of 10 transactions. They often followed disruptive themes such as digital and renewable technologies. According to Dezan Shira and Associates, the trend of companies opting for scope acquisitions continued in 2022, becoming one of the factors driving the record M&A deals value. However, it also cited scale acquisitions as another driving factor. Consider that in 2022, the acquisitions of Adani Group across cement, media, and ports dominated the headlines. The conglomerate made its foray into the cement sector by buying Swiss materials firm Holcim's stake in Ambuja Cements for $6.5 billion. The group also acquired Israel's Haifa port for $1.18 billion and media firm NDTV this year. Indian companies also became aggressive in overseas acquisitions. Biocon Biologics, a subsidiary of Biocon, completed the acquisition of Viatris's global biosimilars business in a part equity, part cash transaction worth $3 billion. While M&A activity experienced a significant slump in the US, Europe, and Asia Pacific markets, India defied the global downward trend in 2022. According to a report by financial solutions provider Refinitiv, India was the only global outlier in this regard. In private equity-backed M&A activity, India even crossed China for the first time since 2008. In 2022, the financial services sector accounted for the highest share in total M&A deals, valued at $69.4 billion. Meanwhile, the high-tech sector accounted for the highest deal volume, with its deal value totaling $18.6 billion. Startup deals also drove M&A activity in 2022. A report by Grant Thornton Bharat indicated that during the first 9 months of 2022, startup M&A deal volumes surged 55% over the same period in 2021. The reason for this was the funding winter that adversely affected Indian startups. We also reached out to experts for their view on what 2022 meant for India's deal-making ecosystem.
Yeah, M&A in 2022 saw unprecedented deal activity. It was primarily driven by domestic M&A. So we really saw the confidence of India Inc. During the last calendar or the ongoing year, where, because of strong balance sheets, focus inwards, good profitability, I think large Indian corporates were buying businesses and were consolidating businesses. Cross-border M&A was, pretty much range-bound, like 2021, where inbound and outbound was, largely muted during the year.
We need to step back a bit and see 2021. I think deal activity witnessed a record high in 2021, surpassing the pre-COVID levels, fueled by cash reserves, PE, dry powder, FDI, and low interest rates. The flurry of this deal activity continued well into the 3 quarters of 2022.
Bankers that Business Standard spoke to for a previous report said that M&As would build on the momentum seen in 2022 and were expected to be robust next year. They also said that in 2023, significant action was expected in the domestic market, even as cross-border acquisitions would see a slowdown due to fears of a recession. According to them, domestic M&As would be led by consolidation in the new age technology space, where a significant number of players would be forced to go the M&A way given the continuing funding slowdown. The bankers also said that the sale of the government stake in Concord and IDBI Bank would be the most watched deals in the first quarter of 2023. Against this backdrop, how do experts see 2023 playing out?
I would expect 3 primary drivers for the coming year. I think domestic M&A consolidation would be the headline theme again in the coming calendar. However, on the manufacturing side, the capex cycle is expected to really come back, and due to which you would see increased deal activity with global players looking at India, and that should hopefully drive inbound deal activity into India. So you would see a fillip on that side. On the private equity side, they're sitting on, I would say, unprecedented levels of dry powder, and that dry powder has to be deployed.
We have seen somewhat of slowdown in the third quarter of 2022, which is because of the global uncertainties such as supply chain problems, geopolitical instability, rise in inflation, rise in interest rates, volatile capital markets, and fear of global recession. Investors are unlikely to make large investments until these conditions stabilize. These are likely to continue well into the year 2023. But for 2023, there is an expectation that diversification and movement of multinational companies away from China and into India will give a fillip to the M&A activity in India. Also, digital transformation and energy transition are going to be key drivers of economic deal activity.
The year 2023 will likely see robust deal values and volumes being clocked. However, a lot will depend on the quantum of the impact that the projected global recession will have on India by the time the third quarter rolls in, and how well it weathers the storm thanks to its strong economic fundamentals.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.